Hi, good morning, all of you. So today we are learning about decision-making chapter. So in this chapter, you will study that how in business organization, as per management accounting, how we take decisions. So the name of the topic which we will study first is CVP analysis. You can see we have the first topic as CVP analysis. And we will see that how the CVP analysis will help us to take decisions. Like you will see that how you can use in activity-based costing, you can use it in service sector, you can use it in non-profit organization, you can use it in just-in-time system, you can use CVP analysis in product mix decision, you can use it in various other decision-making process. You can see here that we use this method for different decision-making process here. All right, you can see here that we use it in seller further processing, minimum pricing decision, keep or drop decision, special order decision. So you can see we use this method in various type of decision making process. Now the point is that first question comes here, ma'am, what is CVP? Let's first understand what is CVP, what is CVP analysis, how we will use it in decision making, why we will use it in decision making. So I have been allotted 3 days to cover this topic. I have 3 days to cover this topic. So first, what I'll do, Vese, by the way, I was just planning to cover the questions, but since we have extra time, so I will first give you an introduction of why we use CVP analysis. Why we use CVP analysis, how we can use CVP analysis. We will first try to understand this. So here I will take you to the basic. What I believe that you have studied this topic already in your CA Inter, but just let's revise the topic first and then we will jump to the topic here and we will do some questions, because this is a practical topic here, but we have some theoretical concepts also. Like here we consider the non-financial decisions also. So we will see that how we consider all these things. Now, if you will see here, the topic is what? CVP analysis. CVP analysis, cost volume profit analysis. So if you will see, this topic is actually based on marginal costing. All right. This is something which is based on marginal costing. And I believe that you people have already studied about absorption costing and marginal costing in your basic classes. Means you must have studied it in your CA intern. This is what I believe. Now, let's first understand what is this marginal costing and what is the absorption costing. So if you will see, when you have studied the absorption costing, you must have prepared a cost sheet where you consider all the cost of the company. All right, we consider all the costs, like what is the material cost, then you will see what is the labor cost, then you will see what are the other direct expenses. So you will see all the direct expenses of the company, which is also known as prime cost. All right, then we consider the factory overhead, which is also known as production overhead. Then we consider selling general and administration overhead. Selling general and administration overhead. This will give you the total cost of the company. We have learned this in target costing. I told you that actually first we prepare in traditional method. First we find the cost of the product. Then we add the desired profit, what profit we want to earn. And then we get the selling price actually. So in this way, we get the selling price of the product. Then we get the selling price of the product. So in this way, we find the sale of the company. This is the way of finding the sale of the company. This is a traditional method. Now, if you will see what is the marginal costing, in case of marginal costing, we prepare the cost sheet in some different way. So if you will see in case of marginal costing, we prepare the cost sheet in different way. How? So in case of marginal costing, we classify all these costs of the company. You can see the company have these costs. The company have the prime cost and overhead. Prime cost means company have all the direct expenses, direct cost, and the company have all the indirect costs. And in case of marginal costing, what we do in case of marginal costing, we classify all these costs as fixed cost and variable cost. So you have the fixed cost and you have the variable cost here. So all these costs will be classified only in two forms. One will be your fixed cost and the other will be your variable cost. Right? We classify all the costs in this way. And then how we prepare it? We will see what is the sale value, what is the sale. Then we will see what is the variable cost of the company. All right. This will give you the contribution. Total contribution of the company. Then we subtract the fixed cost from here. We get the profit of the company, right? This is something you have already done in your basic session. Means basic classes, CA Inter. You have already done all these things. Now the first question comes here. Why, ma'am, why we use CVP analysis? Why are you not using absorption costing, right? So, ma'am, we have already discussed that even in case of target costing, we do not consider the absorption costing. Even in activity-based costing, we were not using this method. So, you have learned we already have avoided using this method, absorption costing. The first question comes here, ma'am, you're finding the same cost here, then why are you avoiding it? Why are you avoiding using this absorption costing? For a reason, if you will see here, this method will help you in decision making. While absorption costing cannot be used in decision making. All right, so if you will see here, this method will help you in decision making. This CVP analysis method will help you in decision making. This will not help you in decision making. So the main aim of using the marginal costing is that it helps in decision making. You can see this chapter name is what? Decision making. How are you how are you taking the decision for the company? By using CVP analysis, marginal costing. We are using here marginal costing for decision making. Actually, the CVP analysis helps you in decision making. Now the question comes here, ma'am, how this method helps us in decision making? So now this question will come in our mind, ma'am, that how the CVP analysis helps in decision making. CVP analysis. How, ma'am, how this method help us in decision making? Now, the point is that if you will see in the business organization, most of the costs are not relevant for decision making. What are these costs which are not relevant in decision making? What are these costs which are not relevant for decision making? All right, what are the costs which is not relevant for decision making? So if you will see any cost which we have incurred in past, so any past cost, right? Any cost which we have already incurred in past, obviously such cost is not relevant for you when you are taking a decision for future, right? So actually, in case of absorption costing, we consider all the costs, mostly the costs which we have already incurred in past. Like in most of the cases, like if we have incurred any fixed cost. So what I will see, like in most of the cases, fixed costs are past cost that you have already incurred it. You already have the machine. Now on the machine, you are claiming depreciation. Point is that these are such costs which you have already incurred. If you have any such costs which you have already incurred, it will not affect the future decisions. Because in future decision, we will just see what costs we will incur in future. What cost we will incur in future. So what costs we will incur in future will be considered here for the purpose of taking decisions. So for that reason, you can imagine what type of cost we consider here. What type of cost is relevant for future decision? You will see that in such cases, what is relevant for us? In future, we will use raw material for the production. In future, we will use the labor for production. In future, we will use, mostly the variable cost. So you will see here, in this case, you will see most of the costs which you will incur here, which is related to your future, is variable cost. Variable cost means the cost you will incur only when there is production. If there is no production, you will not incur these costs. If there will be production, you will incur these costs. So the point is that you will see most of the cases, fixed costs are sunk costs. Sunk cost means the past cost, right? Most of the cases, I'm not making it general, but you will see like in most of the cases, fixed costs are actually the past cost, the cost which you have already incurred in past, and we call them as a sunk cost. The cost which you already incurred, you have already incurred them, right? Now such costs will not affect the future decisions. So the cost which is not affecting the future decision is not relevant for taking decisions. Cost which will not affect the future is not relevant for decision. The cost which you will incur in future is only relevant for decision. So you will see here in this chapter, like most of the costs which we will consider here is variable cost, not fixed cost. Most of the costs that we will consider here are variable costs. They're not fixed cost. All right. You will see most of the costs are variable cost. All right. Okay. So this is one of the reasons. Now, what is variable cost? Variable cost is the cost which you will incur if the production will increase. If production will not increase, this cost will not increase, right? Let me give you an example. See, I have enough time to explain all these topics, so I'm teaching it from the base. All right. So, for example, I'm producing 5,000 units. Or if I'm producing 10,000 units. Or if I'm producing 50,000 units, or if I'm producing 80,000 units, or if I'm producing 1 lakh units. My point is that if you will see, for example, the variable cost is 2 rupees and the fixed cost is 5,000, right? So if I will increase the production, my total fixed cost is what? In this case, my total fixed cost is 5,000. In this case also, my total fixed cost is 5,000. In this case also, my total fixed cost is 5,000. Here also, the fixed cost is 5,000. And in this case also, my fixed cost is 5,000. You can see here, when I'm increasing the production, my fixed cost remains same. It is actually not increasing. You can see when I'm increasing the production, my fixed cost is not increasing actually. So since fixed cost is not increasing, it remains same. Irrespective of what unit I'm producing, it remains same. And for that reason, if it is same, it is not impacting the decision, right? We only consider such costs which increase with increase in production, because only those costs will impact the decision, right? Like, let me consider total variable cost. So what will be your total variable cost? In this case, 5,000 units into 2 rupees. Here, 10,000 into 2 rupees. Here, 50,000 into 2 rupees. Here, 80,000 into 2 rupees. And here, 1 lakh into 2 rupees. You can see these costs are actually increasing with increase in production. If you will increase the production, these costs will increase. So you can see here, what is it? Variable cost is actually increasing with increase in production. So for that reason, variable cost is relevant for taking decisions. Right? So this is the first reason that why we consider the variable cost for decision making and why we do not consider the fixed cost for the decision making, but we consider the avoidable fixed cost or incremental fixed cost. So for example, when we are increasing the production and for some reason the fixed cost has increased from year to year, the fixed cost have increased. So increase in fixed cost will be relevant for decision making. avoidable or incremental fixed cost is relevant for decision making. But when the fixed costs remain the same, it is not relevant for decision making. Any cost which remains same and is not affecting because of decision rate will not be important for decision making. Keep it in mind, because we will use it many times in the question. We will use this concept many times in the question, that we will consider the variable cost for decision making. Variable cost for sure we will consider for decision making. We do not consider the fixed cost if it is not changing with production. We consider the fixed cost if it is changing with the production. Matlab, if you are increasing the production, fixed cost is changing, it is increasing or decreasing, or in such cases we will consider the fixed cost for decision making. All right, you will see here that we are actually doing the questions for decision making. All right, okay. Now we have just discussed that we consider the marginal costing here for decision making. Marginal or CVP analysis for decision making. Now what happened in this case, in case of marginal costing, see, this is something I believe that that we may find the break-even point. Okay. If you will see what is the break-even point, it is the point we are selling such number of units that the company have no profit here and the company have no losses here. Right? So your sale is enough to recover all the cost and there is no profit and there is no loss. So that means sale minus total cost of the company is what? Zero, right? So the first concept is actually based on break-even point. Break-even point means no profit, no loss, and your total sale is enough to recover the total cost of the company. Now, total costs will be classified. Since it is marginal costing, we will classify our entire cost as either the variable cost or fixed cost. We classify entire cost of the company as variable cost or as fixed cost. So total sale minus total variable cost minus total fixed cost, all right, is equals to 0. All right. Okay. Now the point is that if you will see, sale minus total variable cost is considered as total contribution. This is what? Total contribution. This is total contribution, which is equals to total fixed cost. All right. And what will happen here? This number of units into contribution per unit is equals to total fixed cost. All right. So number of units is equals to total fixed cost divided by contribution per unit. So we will use this formula here. Number of unit that you will find here is break-even point. This will be break-even unit. The number of unit that you will find here is what? This is break-even units. Break-even units means you are selling such number of units that the company have no profit, no losses here. All right. And when we are doing our business, we always want to sell such number of units so that it recover both variable cost and it recover both fixed cost. We want to do the business in such a way that we sell the number of units beyond break-even point. Because when you sell the units beyond break-even point, you will have profit in the company. All right, we have the profit in the company. Okay, now let's come here. So you will see here break-even point. We have just discussed that break-even point is what? Fixed cost divided by contribution per unit. So you can see in denominator, they have taken sale minus variable costs, which is nothing but contribution. right? So say selling price per unit minus variable cost per unit is what? Contribution per unit. So fixed cost divided by contribution per unit, we will use it for the decision making. All right. Okay. So you can see here they are using this CVP analysis here in case of activity-based costing. They will use it in case of non service sector and non-profit organization, and they will use it in just-in-time system also. So we have the questions on these topic. All right. We have the question on this topic. Okay, let me give you one more example here. Then I'll start with the question. So this is your break-even point here, and you will see what else. You will see that the pattern of cost here will be this. So when you are increasing the production and you have the cost, so what will happen irrespective of whatever you are producing? Even if you are producing nothing, the company will have to incur fixed cost. So this is a graph of fixed cost. Because whatever you produce, 0 unit or whatever you produce, irrespective of what you are producing, the company will have always incur fixed cost, right? And variable cost is what? If you increase the production, variable cost increases, right? And this line, pink line, shows total variable cost, total cost. This is what total cost. So total cost will be equal to fixed cost plus variable cost. Okay. And this line, a line from here will show you variable cost, total variable cost. Because if the production is 0, the cost is 0. If you increase the production, the variable cost will increase. So in this way, you will have a graph of it. All right. Okay. Now, if you will read this question, we have a question here. And in this question, we have to find the break-even point also. So I'll give you time, just read it. Then we will discuss this question. Read this question, then we will discuss it. So in this case, what is happening? We are applying the CVP analysis in case of activity-based costing, ABC. We are applying CVP analysis in ABC. Read this question. Read this question. Okay, so let's discuss this question. What is happening here? A company manufactures cycles for both adults and children. Given below is the information about the cycles made for children. Okay. Traditional CVP analysis, activity-based CVP analysis. All right, so what is mentioned here? Monthly demand in production is this. The company's product demand and production is this. All right. The selling price is this and this in both the cases. Variable cost is this and this in both the cases. What is the fixed cost per month? So as identified under each system, fixed cost here is 10 lakh and fixed cost in this case is 8 lakh. All right. This is what activity-based costing, CVP analysis, and this is what traditional CVP analysis. All right. Now see, fixed cost of 10 lakh per month under traditional CVP analysis are those that do not vary with respect to volume. We have just discussed that fixed cost is what? Generally do not vary with production. If you increase the production, it remains same. This is what mentioned here. that the fixed cost does not vary with increase in production. If you are increasing the production, it is not varying. All right, then following an activity-based costing study, fixed cost that do not vary as per volume or any other cost driver has been identified 8 lakh. Now see what is written here. If you will do it traditionally, they're finding that fixed cost is 10 lakh. Traditionally, if they follow the traditional method, they have found that the fixed cost is 10 lakh. 10 lakh is not changing with increase in production. But if you will see it from activity-based costing point of view, if you will see the same thing from activity-based costing point of view, what is mentioned? That actually 8 lakh is the fixed cost. Actually 8 lakh amount is the fixed cost, not 10 lakh. All right, see, it is written as per activity-based costing, fixed costs do not vary per volume is what have been identified as 8 lakh. The costs that do not vary with volume is actually 8 lakh. It is 8 lakh, not 10 lakh. Okay. The study revealed a milling machine is used to cut metal into steel support. Production of these steel support takes in batches of 25 units. Okay. Now here what is happening? There is a study which is revealing, the study is revealing here that milling machine is used. What is used? Milling machine is used here for cutting the metals. Okay? And it is cutting the metals and it converting it into steel supports. And what is happening? It is taking place in batches. This process is taking place in batches. How many batch? In one batch, there are 25 units. All right. In one batch, there are 25 units. All right. Then once a batch of children's cycle is finished, the next batch would be adult cycle. Therefore, after each batch, there would be some setup cost. Now, point is that after every batch, there is some setup cost. What is the setup cost? If 10,000 children's cycle have been produced, the number of setup required is what? 10,000 steel support divided by 25 batches. That means 100 setup is required. How many setup is required? 400, sorry, 400 times setup is required. 400 times setup is required. Okay. And what is the setup cost? Each setup cost is what? Every time when setup is done, every time the setup cost is what? 500. All right. Okay. Next is what? Comprising of material cost like change of oil, jigs, etc. This cost was previously pooled together with fixed cost under traditional costing. Now, if you will see, this is actually a separate cost. This is not a fixed cost. What is it? 2 lakh. This is coming as 2 lakh. So it has mentioned here that in traditional costing, we have actually added this 2 lakh cost here in 10 lakh. While in fixed cost, they have separately given. This 8 lakh is separate and 2 lakh is separate. This 2 lakh is what? It is actually a setup cost. This is actually a setup cost. All right, this 2 lakh is the setup cost. Okay, so this is our question. This cost previously pooled together with fixed cost under traditional CVP analysis. Now let's read the question. Let's see what is the question they are asking here. Find the break-even point per month. Here, what do we have to find here? Break-even point per month. We have to find the break-even point here per month under traditional method, and we have to find out the break-even point per month under activity-based costing. So in both the cases, what do we have to find? We have to find out the break-even point. Okay. So I'll give you time, just do it and tell me what the answer is coming here. Solve this and tell me what is the answer coming here. What will be the break-even units here? Solve it and tell me. Give me the answer. Yes. Solve it and give me the answer. So what do we have to find here? We have to first find the break-even point per month and the profit per month. We have to find here two things here. Just read the question carefully and the requirement of the question. So they're asking you to find out the break-even point here, and then they're asking you to find the profit under both method. All right, let's do this question. So first, what will happen? We will find the break-even point. In both the method. With the help of both the method, let's find the break-even point. All right. So what is the formula for finding the break-even point? We know that break-even point is equals to what? Fixed cost divided by contribution per unit. So this will give you break-even units. Break-even units means we are selling such number of units that the company's total cost is recovered, but the company have neither the profit nor the losses. So company has neither profit or losses, but company sale is enough to recover all the cost, all the variable cost, all the fixed cost. Company sale is enough to recover all the variable and fixed cost. All right. Okay. Now, if you will see in both the cases, what are the fixed cost? What are the variable cost? So you will first see what are the variable cost in both the cases. Same. Variable cost is same in both the cases. Sale is same both the cases. In both the cases, variable cost and sale is same. So what will be the contribution in both the cases? 8,000 minus 7,500. So the contribution will be 500. This will be the contribution. Fixed cost divided by contribution will give you break-even units. If you will see traditional costing, in case of traditional costing, fixed cost is mentioned. What is fixed cost? 10 lakh. It is mentioned. 10 lakh is the fixed cost in case of traditional costing. And in case of absorption cost, ABC costing, we will see. Okay. So let's first find the break-even point in case of what? In case of traditional costing. So you will see, in case of traditional costing, 10 lakh was the fixed cost. Divided by contribution per unit is 500. Divide them, you will get break-even units. All right. Okay. $2,000, I think. It is coming as 2,000. Yes. 2000 unit is the break-even point. In case of what? Traditional costing, 2000 is the break-even point. You can see this is coming as a break-even point here. This is coming as a break-even point here. All right. Now let's see the second method. Let's see the second method means in case of activity-based costing, what will be the break-even point? So if you will see in case of activity-based costing, what do we have? 8 lakh is the fixed cost. And we have the setup cost that will also be considered as fixed cost actually. Though we will allocate them separately using activity-based costing, but it is a fixed cost, right? So what is it? 400 into rupees 500 means 2 lakh. 2 lakh. Divided by contribution per unit is coming here as 500. So if you will see here, in this case also, the break-even unit is coming as 2000 units. In both the cases, break-even unit is coming as 2000. You can see. In case of activity-based costing, fixed cost is 8 lakh. Yeah, you can see here. In case of activity-based costing, the fixed cost is 8 lakh. Along with this, we have the setup cost. In case of activity-based costing, it is mentioned here. We have the setup cost. It is what? On the basis of cost driver, we are allocating the cost, but it is also a fixed cost. So we will consider both 8 lakh and 2 lakh here to find the break-even units. So in both the cases, the break-even unit is coming as 2 lakh. You will see here, you will find it here that in both the cases, the break-even unit is coming as what? 2 lakh. All right. Okay. Now what else, ma'am? So first they ask you to find the break-even point. We have calculated. Then they are asking you to find the profit per month. So let's find the profit also. Let's find the profit in both the cases. So we have the traditional CVP analysis and we have activity-based costing. Let's see the profit. So what is the sale in both the cases? What is the sale in both the cases? Let's see. Sale is what? 8,000 per unit, and in both the cases we are selling 10,000 units. 10,000 units we are selling. You can see here 10,000 is the number of units we are selling. And the selling price per unit is 8,000 here and 8,000 here. So if you multiply them, these two value, the number of unit and the selling price per unit, if you multiply them, you will get what? Total sale. You will get the total sale. So this will give you total sale. Now let's see what is the variable cost, because both the method is CVP analysis. One is traditional CVP analysis and the other one is activity-based costing CVP analysis, ABC CVP analysis, but both is CVP analysis. So in both the cases, we are classifying all the cost as fixed cost and variable cost. All right. Okay, let's variable cost. So what is the variable cost coming here? You can see the question. See the question. What is the variable cost in both the cases? Find it and tell me. So you can see in both the cases, the variable cost is what? 7,500 per unit. So in both the cases, the variable cost per unit is 7,500. So in both the cases, the variable cost is what? Rupees 7,500. If you subtract them, what will you get? Contribution. We will get contribution, ma'am. So 10,000 units into rupees 500. Contribution 10,000 units into rupees 500. This will be the total contribution of the company. Then see, what do you have to find here? You have to find the fixed cost, right? So you have to find the profit in both the cases. So less fixed cost. In this case, we have assumed the fixed cost as 10 lakh. Less fixed cost is 8 lakh. And less the setup cost is 2 lakh. If you will subtract them, you will get the profit. You will get the profit. If you subtract them, you will get the profit. All right. Okay. So what is it coming? So I have 5 minus 40 lakh. So here the profit is 40 lakh. Okay, now let's see in this case, what is the profit? 40 lakh. You can see 8 plus 2 is 10 lakh. And if you multiply them, you will get 40 lakh. So you can see in both the cases, the profit is 40 lakh. You know? In both the cases, the profit is coming as 40 lakh. All right. Okay. So you can see what is happening here. In both the cases, they have asked you to find what the profit and the contribution. You can see they have asked you find the break-even point. We have calculated it and then profit in both the cases. So you can see the profit is coming as 40 lakh. Okay. Let's see the answer also if you want. You can see that how they have solved it. So in both the cases, they have calculated that the profit is coming same. It is so simple question, not at all difficult. It's not at all difficult. You can imagine, you just have to find the profit. Sale minus fixed variable cost minus fixed cost is profit. In both the cases, you have done the same thing. Sale minus variable cost minus fixed cost is profit. Just the way they have presented it is different because one is traditional CVP analysis and the second one is ABC CVP analysis. All right, so you can see how they have calculated sale minus variable cost is contribution. So from contribution, they have subtracted the fixed cost and they got what? The profit. Sale minus variable cost will give you contribution. From contribution, subtract the fixed cost. What will happen? You will get the profit. They have done the same thing. You can see they have done the same thing. All right. And you can see here also they have considered the sale minus variable cost is contribution minus fixed cost minus setup cost also. They have subtracted both. And what happened? See, fixed cost and setup cost. You will get the profit. That's it. All right. So in this way, you can find, and they have calculated the break-even point also. So you can see, do it separately in exam. If in exam this question will come, don't do it the way they have done it here, because it is two separate part of the question. Better do it separately, the way I have done. So break-even point they have calculated here in between the question. Fixed cost divided by the variable cost per unit will give you the break-even point, right? So they have done the same thing in between the question, but I will advise you in exam, do not do it in the same way. Instead of doing it in this way, you should do it in this way, the way I have done here. Find the profit separately and find the contribution break-even point separately. Don't do it together. Okay, so you can see here they have calculated it. All right. Okay. They have calculated it here. Okay. Now the next portion of the question. Let's read the next portion of the question. So this is the second portion of the question. What is the second portion of the question? As a plant manager, you would like to keep the number of setup minimum. Now see, it is actually, the question is also related to just in time also. Why? Let me show you first just in time. Achha, give me 1 minute. Let me show you the just in time also. Okay, so if you will see, this is your just-in-time system, right? And in case of just-in-time system, total cost is classified as what? Fixed cost. Engineering cost will be separately mentioned. Why? Because with the help of engineering efforts, with the help of engineer efforts, we implement just-in-time system. With the help of engineering, we change the production process, we change the design of the production process, right? We change everything. So this happened here. So this will be your cost equation. In case of just-in-time system, you are classifying entire cost of the company in this way. Okay, variable cost plus fixed cost plus engineering cost. Engineering cost will be, total engineering cost will be considered separately, because in just-in-time system, our focus is to implement the just-in-time system, and that may require extra engineering cost. So this cost should be separately mentioned. So this cost they have separately mentioned. And if you will see here what is happening, with the help of implementation of just-in-time system, they will manage to reduce what? They will manage to reduce their setup cost. Setup cost. You will see, I don't know you remember or not, but we have discussed this in just-in-time system, that with the help of just-in-time system, we can reduce the setup cost. And you can see here also, they are actually focusing on reducing the setup cost. With the help of just-in-time system, we focus on reducing what? Setup cost. Cellular manufacturing. You remember, in case of just-in-time system, we do not want to produce the goods in batches. You can see here, they are actually producing the goods in batches. 25 unit in one batch. So that means they are actually producing the goods in batches. But if you remember, in just-in-time system, we do not want to produce the goods in batches. Instead of producing the goods in batches, in just-in-time system, what happened? We want to produce the goods one by one, one by one, one by one, one by one. So we want to produce the goods one by one. So instead of producing the goods in batches, we focus on producing the goods one by one. All right. So this is how we focus on producing the goods. All right. Okay. So let's read the second portion of the question. Give me 1 minute. So what is the second portion of the question? As a plant manager, what is the question? As a plant manager, you would like to keep the number of setup minimum. you want to keep the setup cost minimum, है ना? We have learned in just-in-time system, we actually do not have the setup cost. We just focus on producing the goods one by one, one by one, one by one, not in a batches. We do not want to produce the goods in batches. We want to produce the goods one by one, one by one. Is your cellular manufacturing actually. That will be your cellular manufacturing. All right, so the same thing they want to do it here also. They want to keep the setup cost minimum. Since they reduce the capacity of the machine, suppose that at any time, the milling machine can be used to produce other type of cycles like adult cycle, sports cycle, etc. Therefore, you propose to increase the batch size of the children's T supports. Now, what is happening here? Earlier, the number of setup was 400, right? Now, what is happening? They want to reduce this. Okay, actually, they are not implementing just in time here. They have not yet implemented the just in time system here. They are just focusing on reducing this number of setup. If they want to implement just-in-time system, this number of setup will be completely eliminated. And instead of setup, they will produce the units one by one, or it will be reduced to very less. Number of setup will reduce to very less. Here, what is happening, you can see here, they have reduced the number of setup by increasing the batch size. And they have reduced the setup by increasing the batch size. How? So here, what happened? In one batch, they had 25 units. So number of setup was 400. Now what happening here? One batch have 50 units. One batch have 50 units, right? So number of setup will be what? Number of setup will be 10,000 units divided by 50. So this will give you what number of setup here. If you will divide them, you can see the number of setup is coming as 200. Here, what was the number of setup? 10,000 divided by the number of unit in one batch, 25 units. So number of setup was 400. So you can see here, they have reduced the number of setup from 400 setup to 200 setup. They have reduced the setup. 100 times setting the machines to 200 times setting the machines. So they have reduced this time of setup by increasing the batch size. So instead of producing 25 units altogether, now they are producing how many units? 50 units together. All right. What is the question? Question is that analyze the impact on break-even point and profit per month. So the question is that if we reduce the setup, number of setup, what will be the break-even point and what will be the profit? Can you do it? I'm waiting. Just try to do it. Find the break-even point. If they have reduced the number of setup, find the profit if they have reduced the number of setup. Do it. Solve it. Yes. Solve it. If the company have reduced the number of setup, what will be the profit? What will be the break-even point? Do it. Yes. Will it change? My question is that, can you tell me if the number of setup have changed here, the break-even point will change or not? The profit will change or not? Can you tell me, will it change or what? Yes, will it change? I'm waiting, huh? I want you people to try it at your own. So I'm waiting. This is the question. My question is that number of setup have decreased. Now what will be the break-even point? Will the break-even point change? Will the profit of the company will change? What will be the new break-even point? What will be the new profit of the company? Find it and tell me what is it coming. Yes, tell me what is it coming? What is this coming? Tell me. Yes. Okay, so Janvi is saying break-even point is 1800 and profit is 41 lakh. Very good, Janvi. Okay, what about other student? What about other student? Yes. Okay, let's try to find it quickly. Very nice, Janvi. Let's try to find it quickly. So we know break-even point is what? Fixed cost plus setup cost divided by number of, contribution per unit. Now, what is happening? Fixed cost in case of a activity-based costing. See, you have to find it for activity-based costing. है ना? Because in case of traditional method, the entire fixed cost will remain same. The setup cost is separately given in case of activity-based costing. So your fixed cost was 8 lakh. And setup cost will be what? Your setup cost will be what? How many units do you have here? How many setup do you have here? 200 setup. What is the cost for one setup? For one setup, the cost is what? Yes, 500. Each setup cost is 500. So into rupees 500. Rupees 8 lakh. Divided by contribution per unit. So you know sale was your 5,000 and variable cost was 4,500. So sale minus variable cost is your contribution. You know, you can see in the question, your sale was 8,000 and 7,500. Okay. Your sale was 8,000 and 7,500. So sale minus variable cost will be contribution, and fixed cost is given as 8 lakh. Setup cost will change here in this way. Hannah, so you can solve it. Solve this. 9 lakh divided by 500 is what? So this is coming as 1800. So 1800 unit is your break-even point. Hannah, this will be your break-even point. Now the question comes here, ma'am, what is the profit? So profit will be what? Let's see the profit. Sale. How many units we are selling here? 10,000 units. Each unit you are selling at rupees 800. 8,000. What is the variable cost? You are selling 10,000 units and the variable cost is rupees 7,500. Okay. From where you are taking the figure, ma'am? Okay, let me show you. So if you will see in the question, they have already given you that they are selling 10,000 units. They are selling 10,000 units and the selling price per unit is 8,000 and the variable cost per unit is 7,500. This is given in the question. So we have just taken these values. What? The sale is what? 10,000 and the variable cost is 7,500. This is given in the question. All right, okay. With this, you will get the contribution. So 10,000 units into 500 will be your total contribution. Less, what is the total fixed cost? And less, what is the setup cost here? This will give you what? The profit. So if you will go back here, you will see fixed cost is what? What is the fixed cost coming here? You can see here, your fixed cost is coming as what? This is the fixed cost. No, sorry. This is the fixed cost. 8 lakh is the fixed cost. And setup cost is what? 200 setup into one setup cost is what? 500 each setup cost. So total fixed cost is your 8 lakh. Setup cost, number of setup is 200. Setup cost for each setup is 500. Just subtract them. You will get the profit. You know? So you will see this value is coming as 1 lakh. This is 8 lakh. And this is what? 50 lakh. So 50 lakh minus 9 lakh will be 41 lakh. Right? So in this way, you can find the break-even point and contribution or profit. Okay. So you can see these two questions are so simple. And in most of the cases, you will see in your book, questions are very simple. They are lengthy. Bus. This is the point. Questions are lengthy and they are in length. But if your concepts are clear and if you will do it, you will find it easy like this. They are so simple. Like this question, it was so simple. You just have to find the break-even point considering the fixed cost divided by contribution per unit. Such a simple question. है ना? So you will see the questions are actually very simple. All right, but they are lengthy. That's it. The point is that these questions are very lengthy. That's it. Okay, third portion of the question. When should labor costs be factored into the calculation of cost of setup? You have seen the setup cost. Question is that when do you consider the labor cost? When do you consider the labor cost here? Yes, when do you consider the labor cost? This is the question. And we have one more question here. How can the number of setups and cost of each setup impact the flexibility of milling machine? So how the number of setup and cost of setup, it is impacting the flexibility of machine. How is it impacting the flexibility of machine? This is the last question. And here, how the labor cost is impacting the setup cost. Okay, labor cost is impacting the setup cost. Let's see. See what is happening here. Inclusion of labor cost in the cost of setup would depend upon the availability of these points. Okay. So first point is that cost of temporary labor hired for a particular setup. So if you hired a specific labor for that specific job, right? Matlab temporary, you have hired the employee or the labor. When you have temporary hired the labor, then what will happen? You can identify the cost and that will be included in setup cost. When you know this labor is working for the setup, that's it. His work is to set up the machine. When you know the work of this labor is just to set up the machine, you will consider his efforts there in setup cost. Okay. When the cost of permanent labor used for setup, when the labor who is actually producing the goods, who is engaged in the production, labor cost will be separate, right? You know, material and labor cost are the direct expenses or the direct cost of the company. But when the same labor who was engaged in production is now coming here and he is doing the setup work, right? Then you will see how much efforts he's producing here, and then you will find the cost accordingly. However, where the permanent labor is used for setup, who are otherwise fully engaged in production process, and additional labor supplies are unavailable in short time, and where no further overtime working is possible, the opportunity cost of the labor is needed to be considered. So what is mentioned? Permanent labor you have, who is engaged in the production, and you called him for the setup, his opportunity cost will be considered, right? Because he is actually not working in the production. That labor was for the production. You are interrupting the production process and you're calling the labor not to do the production, first set up the machine, then you can go and do the production. You can imagine when you will say labor not to do the production and come here and first set up the machine, then go and do the production. During that process, the production process will be hampered. It will stop. The production process will stop. That will, actually reduces the production process. So it will result in loss of opportunity loss. So here we will consider the opportunity cost. So in this way, the efforts of the labor which you have used here will be considered. Whatever the efforts of the labor is used here will be considered here. Hai okay. Now the next question was related to what? How the setup, number of setup into setup cost. This was the question, that how the number of setup and setup costs will impact what? Machine, milling machine. Okay. So setup reduces the production utility of the machine. Ab dekho, if the number of setup will be high, you are using the machine less. Instead, in case of just-in-time system, what happened? We place the machine in this way, in a cellular belt, assembly belt. So this is assembly belt, and you will place the machine in this way. Product will pass through here. It will gain value at each stages. This product will first gain value here, then it will 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 gain value here. Then the product raw material will be converted into finished good. So in this way, the production will take place. Now the point is that, the question is that, how the number of setup and setup cost is affecting the machine. Dekho, this is actually a process of cellular manufacturing. In case of cellular manufacturing, we never stop the production actually. In case of cellular manufacturing process, we never stop the production. We always keep on producing the goods. One by one, we keep on producing the goods. We never stop the production process. So the point is that when you never stop the production, what will happen? No setup. No setup is required, and you are continuously using the machine as much as possible. Best utilization of the machine. So when it is just-in-time system or cellular manufacturing, machinists keep on working. They keep on working, they never stop. So the point is that these are the best use of the machine. You're using the machine efficiently, the best use of machine here. All right. But what is happening here? When you are just reducing the number of setup, then what is happening? Obviously, when you will set up the machine will stop. They will stop working. And once the machine will stop working, you are wasting the time of the labor. You are wasting other resources. If machine will not do the work, you will waste the electricity. You waste the rent of the premises which you are paying. Point is that the time period for which you are taking to set up the machine, the time period for which the machine is not working, you are wasting other resources. Now, what will happen? It is a kind of waste. We have learned in lean management. We try to avoid all type of waste from the company. It's a kind of waste actually, right? So you can see here it is mentioned in the question, in the answer also. what will happen if there will be any setup is reduces the production utility of setup. Actually, if the number of setup will be there, it reduces the utility of the machine. You are not using the machine efficiently, है ना? You're not using the machine in best possible way when there is setups, है ना? Instead, we should have continuous production process like we have in cellular or just in time system. The production process should be like that. All right, so setup reduces the production utility of the machine. Lower number of setup or lower setup can improve the utilization of machine. Ab dekho what is written here. If the setup is less, you are using the machine in a better way. But when there is no setup, like here you can see, this is the best use of machine. Just in time system, right? This is the best use of machine. This just in time system, cellular manufacturing is the best use of machine because here no setup is required. We never stop the machines from the production, and the machinists keep on producing the goods one by one, one by one, one by one. No setup at all. So the point is that here it is the best use of the machine, best utilization of the machine. But yes, when you reduces the number of setup, you're using the machine more better way. You know? So setup can improve the utilization of machine. Right? Okay. So accordingly, you can answer the question. Okay. Now the point is that we have the next concept. So in this question, this topic is related to what? Okay, again, this is related to just-in-time system. This question is related to just-in-time system. Okay, so let's take a break first and then come back because it's a new topic. So obviously, I will not take a break then after for 1 hour because it's a long topic. So let's do one thing. Let's take a first break. Then what topic I'll cover after this? You can see I'll cover just-in-time system after this. So we have a question of CVP analysis on just-in-time system. You can see this is a question of CVP analysis on just-in-time system. Then we will see that how we can apply this CVP analysis in case of service sectors. All right. So these are the two topics that we will cover. But let's take a break first. So hi, welcome back. So now we are learning about that how we can use CVP analysis in just-in-time system. So we have learned in case of just-in-time system, we actually wants to produce the goods in cellular manufacturing. You must have learned that we actually arrange the machines, grouping of machines. We create the cells in this way, and the product will move here in this assembly line, and the product will pass through this assembly line, and it will gain through values on each cells, through each cells, right? And if you will see, the cells is actually a group of machine. Here it is what? It's a group of machines. All right. Okay, it's a group of machine. Now what happened, you will see, in case of just-in-time system, they actually focus on reducing the cost. We have learned that we implement the just-in-time system or we implement the lean system to reduce the cost. Say yes or no. We have learned that this helps us to reduce the cost. How? By removing all the waste or non-value added activity from the company. Non-value added activity means waste. So you will see that it helps in reducing all the cost, all the non-value added activity from the company by removing all the waste from the company. So it actually focuses on reducing the cost, but since we have arranged the machine in this way, we are actually focusing on arranging the process, organizing the things, right? So for that reason, when we implement this just-in-time system, fixed cost actually increases. Fixed cost increases, and what type of cost reduces? You will observe generally or mostly variable cost will reduce. In this case, most of the cases, variable cost is reduced. So basically, if you will see, like most importantly here, the labor cost is reducing. How? I will show you how. Most importantly, in case when we implement just-in-time system, labor cost reduces for a reason. You can imagine before just-in-time system, there was unnecessary motion of the employee because the machine were placed far from each other. So for example, give me 1 minute. Let me try to explain you this. So before just-in-time system, what happened? One machine is here, second one is here, third one is here. You put the raw material here, then what will happen? A labor is required to transfer the units. 2 labors are required to transfer the units from here to here. So this person will take the raw material from here to here. This person will return the trolley from here to here. So at least 2 people are required just to move the inventory from one machine to another machine. Just to move the inventory from one machine to another machine, we need a person. We need 2 persons here. So you can see this is what unnecessary motion or movement of employee, unnecessary motion of the employee. Similarly, we need 2 labor here to move the inventory, from machine B to machine C. We need 2 labor here also. Then what will happen? You will get the raw material here and you will produce the final good here. Point is that if you will observe this, what is happening here, if you observe this entire process, unnecessary labor is required. This is a waste. We have learned this motion of employee moving here and there unnecessarily is a waste. Instead of placing the machine far from each other, place them together. So what will happen? Instead of placing the machine in this way, if you place the machine together, A, B, C, only 1 person is enough to maintain these 3 machines, grouping of machine. So you can see 1, 2, 3, 4. 4 labor are replaced by 1 labor. 4 labor is replaced by 1 labor. The work that was done previously by 4 different labor, now it can be done by just 1 labor. So you can see when you are implementing just-in-time system, what is happening here? You are saving the labor cost actually. Material cost may increase because you are asking the supplier to drop the inventory straight to the production floor on the machine. You're asking the supplier to drop the inventory straight to the production floor on machine. Maybe the material cost increases for that reason. But labor costs will reduce drastically here. All right. The labor cost will drastically reduce here in this case. You can see the labor cost will drastically reduce here. Labor cost will drastically reduce. All right. So you can read it from here also. Give me 1 minute. In a firm has if a firm has implemented what just-in-time system, the variable cost will reduce. The company's variable cost will reduce, and the fixed cost may increase because now you are setting up the entire process. Now we need different machine and we have to place them together in a group. So maybe it will increase the machine cost. Maybe it will increase the factory space in the factory. So maybe rent will increase. Fixed cost may increase in this case, but variable cost will reduce. Especially you can see direct labor is considered as fixed instead of variable. Direct labor costs will reduce, and whatever the labor is required here now, they are fixed in nature. They're not variable. The labor cost will reduce, and whatever the labor cost is required here will not be considered variable. That will be considered as fixed cost. Right? We may need material cost may increases here. Why? Because you need a quality product and you need the material at the production floor. But just-in-time system will help you to remove all the defective units. All the defects you can avoid, all the waste you can avoid, all the scrap you can avoid. And you're producing the quality product right the first time. Right? Other unit-based variable costs such as power and sales commission also exist. Okay, these costs will exist. So you can see here, in this case, they are classifying all their costs, total cost, either as a fixed cost or as a variable cost or as an engineering cost, because engineering efforts is required to maintain the cellular manufacturing. Total productive maintenance we have learned. Engineering cost is required here to maintain the setup of just-in-time system. So you can see here, labor cost is considered here in fixed cost, material and other direct expenses and variable expenses will be considered here, and engineering cost will be considered here. So what is happening in case of just-in-time system? We are classifying all the cost in this way. We are classifying our entire cost in this way. So this is how the things is happening here. Now we have a question. Just give me 1 minute. So we have a question here on just-in-time system. You can see just in front of you. I'll give you 2-3 minutes to read it. Because what I believe, if you will read it, then we will discuss. It will be easy for us to understand it. So take your time, take 2 minutes and read this question. I hope you have done the reading of this question. Okay, so if you will see the red portion, I have already done it. This is not given in the question. This is not the part of the question actually. Okay, this was not given in the question. If you will read the question from your material, it is not given in the question. Hello, this is actually the part of solution. So this information is not given here. Okay, I hope you all have done the reading. You have done the reading, right? Yes. Quickly tell me you have done the reading. Storage cost. What about storage cost? Where? Okay. So there is a doubt from the last question. Okay, give me 1 minute. Give me 1 minute. Let me see what you are asking here. I don't think in last question we had any storage cost. I don't think we have any, here we do not have any storage cost. Where is storage cost? There is no storage cost here in this question. Why are you writing storage cost? What was your doubt here in this question? There is no storage cost in this question. We have done just one question and there is no storage cost. Give me 1 minute. Let me read the next question also. Storage cost, there is no storage cost. Okay, Appalla, there is no storage cost. I can't see any storage cost. If you have seen any storage cost, please write in comment. I'll read it and I'll explain. There is no specialization of work in case 1. See, the point is that, Janvi, what happened when you want to implement just-in-time system now, we provide the training to the labor first. So you can see, though we are replacing the old 4 employees with 1 employee, 1 labor, or all 4 different labor are replaced by 1 labor. But before placing the labor under different machines in one grouping of machine, before placing them there, we will first provide them training. First process is to provide them training. Then he will come here, because actually, if you will see in just-in-time system, labor have 2 responsibility. In case of just-in-time system, you are placing the labor here, right? You are placing the labor here. So actually here the labor have 2 responsibility. First responsibility is to produce the goods. Produce means to add the value addition. To add the value in it, right? This is the first thing which we will do. Second is what? Second, they are maintaining the machine also. They maintain the machine also. We have learned total productive maintenance. Actually, they have 2 responsibility. These worker have to add the value. The product that will pass through here, he will work on it. So he will add the value to the product which will pass through here. And second is that he will not just add the value, but also he will maintain the machines, right? Total productive maintenance means his work is to maintain all these machines. He will maintain all these machines. So here his work is of 2 types. He will maintain the machines and he will add the value to the product. So just remember here, and for that reason, these responsibility of these labor will increase. So what will happen? We will keep them permanent. They are not daily wages worker. So they will not remain as a daily worker to whom you pay daily salary or, per hour basis. So you will actually convert them, these labor, into employee. And instead of paying the wages, you will pay them salary. So in this way, the things will change here. So for that reason, instead of labor, now they will become employee. So what will happen? Instead of labor cost, now you are incurring fixed cost on them, because they are now asset for the company. You are providing them training to work here. So in just-in-time system, these labor cost, instead of variable, they will convert it into fixed cost. Right? So this is the things which is happening here. Any other doubt? Do you have any other doubt? Yes, second part of first question. Okay. Second part of first question is what? See, this is the second part of the first question, right? I can't see anywhere. We have just setup cost here. Read the question. Second part of first question is all setup cost. This is all setup cost. You can read and you can see that these are all setup cost. They're all setup cost. There is no storage cost here. I have taken only one question, right? I have not taken any other cost, any other question. Storage cost. There is no storage cost here. Okay, let me tell you, in case if you have any storage cost, like if you have a warehouse, if you have a warehouse, obviously you will store the inventory here. So in case if you have a warehouse, you will pay the rent for it. So this storage cost will be considered as a fixed cost here. Okay. So in case, though here no storage cost is given, I can't see any storage cost here, setup cost is given here. But in case if there will be any storage cost, that storage cost will be considered as a fixed cost. All right. Okay, now let's do this question. We have this question. Let's do this question. Okay. So what is the question? Let's read the question. Catalyst Limited makes a single product with the following details. What is it? Selling price under the current situation is 10 and the direct cost is 5. All right. Then the number of setup at present, the current scenario, the present number of setup per production period before each production run and setup is done is 42. There are 42 production setups. 42 times you will set up the machines. All right. Then cost per setup is 450. Number of setup is 42 and cost per setup is 450. Production unit per run, production unit in one run, production unit is this. In one run. The number of units which we are producing here is 960. All right, then engineering hour for production period is 500. Engineering hour. Then cost per engineering hour is 10. Then what is the question? Company has begun activity-based costing of fixed cost and has presently identified the cost driver. Production run and engineering hours versus what? Production run and engineering hours. Of the total fixed costs presently at 96,000, after the above, 70,100 remain to be analyzed. There are changes as proposed above for the next production period for the same volume of output. So it is mentioned that the number of units that you are producing here under proposed change is same. Okay, what else is given here? Compute. What is the question? What is the requirement of the question? Compute units and production run catalyst limited. Okay, so you have to find out the number of units here and what is the production run here should produce in the change scenario for break-even point. Okay, so you have to find out here under the proposed scenario what will be the break-even point. You have to find it here. You have to find what the break-even point under the proposed scenario. Okay, so what is happening here if you compare the scenario? So what is given? Cost per setup is decreased by 90. This is given. So earlier your setup cost was 450. Setup cost was 450. Now the setup cost is reduced by 90. This is given in the question. So that means the new setup cost will be what? New setup cost will be what? 450 minus 90. Right? So 360 will be what? New setup cost. All right, this will be a new setup cost. So this will be a new setup cost. All right. Then what do we have here? Nothing is mentioned about the cost per engineering. We will assume that it remains same. Okay. It remains same. Nothing is given. We will assume it will be same. This will remain same. Okay. What else? What else we have? Production run. Production run is what? In one run, how many units we are producing? In one run, we are producing 960 units. And under proposed system, what will happen? In one run, we will produce how many units? 1008. This will be the number of units that we are producing here. All right, 108 will be the number of units that we are producing here. All right, okay. Now what do we have to find? We have to find out the break-even point. All right, okay, now let's see how we can find the break-even point. Okay, so you can see for break-even point, for finding the break-even point, what do we need? We need contribution first. For finding this, we need two things. We need fixed cost and we need what? Contribution. This gives the break-even point, right? Say yes or no. We want these two things. Now read the question and think about it. Think about it, that how we can find the break-even point here. So you can see, since it is just-in-time system, in case of just-in-time system, what will happen? We replaces this fixed cost with what? We replaces this fixed cost with what? Three type of cost. One, we need fixed cost. Then second, what do we need? We need here fixed cost and we need what? Setup engineering cost, and we need what? Okay, give me 1 minute. Let me show you. So we need all these costs. Okay, engineering cost, we need engineering cost also here. Give me 1 minute. We need engineering cost also here. So you can see engineering cost is given in the question. All right. And yes, we need setup cost also here. So that will all be the part of fixed cost. Set up cost, and we need engineering cost. Right? We need these costs here. We need what? Fixed cost, setup cost, and engineering cost. These are all fixed costs. These are all fixed costs that we will consider here, divided by contribution per unit. Divided by contribution per unit. Now just see here and find what is the fixed cost. Find it. What will be the setup cost? Find it. And what will be the engineering cost? Find it. And what will be the contribution per unit? Find it, so that you can calculate the break-even point. You can see that you have to find out the break-even point under the proposed scenario. So in order to find the break-even point under proposed scenario, you have to find all these things. You have to find the fixed cost. You have to find the setup cost. You have to find the engineering cost. You have to find the contribution per unit. We have to find all these things here. All right. Okay. Now let's do one thing. Let's see that what are your fixed costs, these costs here? What are your setup costs if we have any setup costs here? What will be the engineering cost and what will be the fixed cost? Can you do it? Can you tell me what will be the engineering cost that we will consider here? What will be the fixed cost that we will consider here? Yes. Okay, so if you will see here, we are producing this units. See what is written? Present number of setup per production period. So one time, when you're producing the goods, you're producing it in this number, 42 number, 42 units at a time, 42 units at a time. And in how many production run you are producing? You are producing this 40 time at a time, 42 at a time, 960 times. So 960 times you are producing it. So what will happen if you multiply them? You will get the number of units that you are producing here. So if you want to find out the total number of units that we are producing here, you can find it easily. So what is it? You can see, I can take these two figures, 42 into 960. If we multiply them, it will be coming as 40320. These are the units that we are producing. These are what the units that we are producing here. These are the number of units that we are producing here. All right. Okay. What else? So accordingly, what will happen? We have to find out the setup cost, right? So the same information, we will use the same information to find here the number of setup, number of setup, right? So you can see production unit per run is what? In one run, we are producing these number of units. So we will see in how many production, how many times we are producing the goods. We have to find it here also using the same information. All right. We will use the same information in order to find out the number of setup here. All right. Okay. So you can see that in total, we are producing how many units? Okay, let me give you, see what is given here. It is given here that production unit per run. In one run, you are producing 960 units. And now you have how many runs? This time setup means you have this much of run, this much time you are setting the machine. So this will be the total number of run. So if you multiply them, these two value, run, how many times you are running the machines, how many times you are running the machine, into the number of units, what will happen? This will give you the number of units that we are producing here. So we know in both the cases, these are the number of units that we are producing here. 40320 are the number of units that we are producing. So now I want to know in how many runs we are producing the goods here. How many runs we are producing the goods at this place. So what will happen? I'll do one thing. I know that how many units we are producing here. I know that how many units we are producing here? 40320. These are the number of units which we are producing. Okay, divided by, in one run, we are producing this much of unit. So this will give me, in one run, I know that I'm producing this much of units. So this will give me the total number of runs. You know, the total number of runs. I don't think it is coming as 1008. Give me 1 minute. Let me check. Okay, so what do we have here? 40320 divided by 1008. 40 run. So in how many runs we are running? 40 runs. Done. Okay. So why we have calculated? We have calculated this to find out the setup cost. This will give you the setup cost. This value will give you the setup cost. You can see in the question we need setup cost. Acha, what else do we need? We need engineering cost. And engineering cost is already given. What you know, this is the number of hours for the engineering, and the engineering cost is given. You have calculated the number of runs here and in how many units you are running in one run. And you know the cost, setup cost here. So you can use this to find out the setup cost. Right? You can use this information and you can find the engineering cost. Right? And you have the fixed cost, right? So you will use them to find out the break-even point. You know the sale and variable cost also, right? It will remain the same. Give me 1 minute. So the selling price per unit will remain same, 10 rupees per unit. And the variable cost will remain same, 5 rupees per unit. If you subtract them, you will get what? The contribution. So this is given, right? We have this information. So this will help you to find out the contribution per unit. Okay. So you can see everything is given now. You can use these information to find out what break-even point. You can see what is the question. Compute the units and production run. We have calculated the units and production run. And now they're asking you to find out the break-even point under the new scenario. They're asking to find out the break-even point under new scenario. Let's find the break-even point also. Okay. Let's find the break-even point also. So you know the new fixed cost is 72100. It has reduced from 96,000 earlier to 72,100 now. Setup cost is what? How many setup is required? 40 times setup is required. 40 times setup is required. What is the setup cost here? 90 rupees. No, not 90, 360 rupees, because the setup cost has reduced by 90. So it will be what? 360. So 360. Plus, what will be the engineering cost? Engineering cost will be what? 422 into 10. This will be the total fixed cost of the company. Divided by contribution. So contribution is what? 10 minus 5. This value. Okay. Now please calculate and tell me what is it coming. Calculate this and tell me what is it coming. What is this value coming? Yes, please tell me. And if you have any doubt, please ask your doubt also. Okay, solve it and tell me what is it coming. Okay, I missed this line, I think. Okay, I'll come back to this question later on. Let's first do this question, then I'll come back to that question. The question you people have asked in comment. I'll come back to that question also. All right, okay. Let's do this question first. What is it coming? Can you tell me? So this is coming as 18144. This is your break-even point coming here. So break-even unit is coming as what? 18144 units, right? Okay, unit of break-even point. Now in the question, they're asking you that what will be the production run also. At break-even point, what will be the production run? So you know that in one run, how many units we are producing? Per run, in one run, under the proposed system, we are producing this much of unit. So in case if we produce total, in case if we total produce 18144 units, so you can find the production run also. You can find the production run here also. How? By considering these values. 18144 divided by how many production run we have here? 1008. We have in one run, we have this much of units. Total at break-even point, we have this much of unit. If you divide them, you will get number of runs. 18 runs. So in this way, you can find the total run here. All right. So you can see, again, the question was easy. What was difficult here? Let me revise it again. What was difficult to understand here? So the question was that you need fixed costs, you need setup costs, and you need engineering costs. We need these information. If you will see, fixed cost was given here. Simple, sorted. One thing is sorted. Second, engineering cost was just a multiplication of these two values. Second is sorted. Third was related to setup cost. If you will see, for setup cost, this information was not given. This information was not given, right? So for setup cost, what we have to do, we have to first find the number of setups and the cost per setup. So for the cost per setup, it was given that the cost is decreasing by 90. So 450 minus 90 will be the new production setup cost. 360 will be new production setup cost. Setup cost is clear. Now number of setup. How many setup we required. For finding the number of setup, we first need to know what is the number of units we are producing. We don't know how much units we are producing. So you can see here, they have given you this number of setup here. This number of times they have set up the machine. And in one setup, they are producing this much unit. So if we multiply these two values, we will get total units that we are producing. Total units that we are producing, and it is given here under the proposed system. In one production run, we will produce this much of units. So out of the total units, when you divide this unit, you will get the production run. So now you get the number of time you are setting the machine, and the cost of setting the machine will give you setup cost. Now you will easily get your setup cost. That's it. So you can see now engineering cost is given here, fixed cost is given here, setup cost you have calculated. That's it. Simple. All right. Now, if you have doubt, you can ask me. I'll go back to the last question also. If you have any doubt here, please ask me immediately, huh? Yes. If you have any doubt, please ask your question, ask your doubt. Yes, any doubt here? No doubt? Okay, so that's it. We have calculated the production run and we have calculated the break-even point. Let's read the second portion of the question. What is the question? Advise whether this company should continue at breakup the remaining fixed cost into activity-based costing. This is the question. So here what is happening? The company have break up their entire fixed cost into what? Three category: fixed cost, setup cost, and engineering cost. Right? So we have break up all these costs into this cost. So we have classified all this fixed cost into this way. We have classified all the fixed cost under activity-based costing. We have classified all the fixed cost of the company into this way. Now the question is that they're asking you that this is the question, right? The question is that, is it necessary or is it good if you're classifying your entire fixed cost into what? This form? Because you can see earlier the fixed cost was what? It was given. The fixed was 96,000. And now they have break up this cost into this cost and engineering cost and setup cost. They have break up this cost 96,000 into this cost and engineering cost and setup cost. Now the question they're asking you here, is it good if we classify? Is it good if we continue breaking up the fixed cost into these three different costs under activity-based costing? What do you advise? Is it good or not? Write in comment. Let me see what you people will advise here. Write in comment. What will you advise here? Is it good to continue breaking them? Say yes or no. Is it good to continue? Say yes or no, at least reply. Yes, reply. Reply in comment. Is it good that we continue breaking up this entire fixed cost into fixed cost, setup cost, and engineering cost? Write in comment quickly. Is it good to do this? Yes. So I didn't receive any answer from you people. Let me give you the answer. Yes. It is good if we break up the cost in this way. Why? Because in this way, if you break up the cost, it will help you to analyze more in detail. Analyze these fixed costs more in detail, and you can find the way to reduce them further. When you know that what are different costs you're incurring, you can find the way to reduce them in the company. You can find some way, because like most of the costs the company have the fixed cost. We want to reduce it, right? So the point is that if you will break up, it will be easy to find these fixed costs, and you can easily find the way to reduce them in the organization. Dekho, what is written? The company should adapt activity-based costing for accurate product costing, as traditional costing does not take into account non-unit level overheads, right? They have not considered, and for a reason also, that when you break up the cost, for you know that what different type of cost you are incurring in the company. And when you know the different type of costs which you are incurring in the company, you can find the way to work on them, to reduce them further if it is possible. By the way, engineering cost you're incurring to implement just-in-time system, but you can see here, when you're classifying them under proposed system, it has reduced to some extent. Setup cost has reduced to some extent. Engineering cost have reduced to some extent. Obviously, they have, after breaking up, they found the way to reduce them, no? So it is good to reduce them. Yes, it is good. It's good to reduce them. Okay, let's do the next question now after this. Okay, before that, let me go back to the last question. There was a doubt from this question. Give me 1 minute. Let me read your comment if you have any comment. Huh. Okay, very nice. Santosh. What was your question here? So this was the last question which we have done. You people were asking me in comment that what we will do for the storage cost here. Due to large batch production, since you have increased the batch size here. Earlier the batch size was 25, per batch. You were producing 25 units. Now what is happening? One batch. In one batch, you are producing 50 units. So what is happening here? Due to large batch production, additional inventory storage area would be required to store. That will the cost inventory 50,000 per month extra. Okay, so what is happening here? Since in this case you are producing the goods and you have increased the batch size, it will increase the carrying cost. How much? 50,000 per month carrying cost is increased. So yes, carrying cost will increase and we will consider this carrying cost. We will consider this carrying cost also. Yes, we will consider it. I missed it. I missed to read the last line, sorry. So yes, we will consider the storage cost or carrying cost also. All right, this was your doubt, what we will do for this also. This is also the cost for the company. You can see why you are incurring this cost. You are incurring this cost because why the batch size has increased, right? So you can see when the batch size will increase, what will happen? The carrying cost of the company will increase, right? So obviously it will be included in while calculating the profit. Yes. Okay, next question, next topic. Next topic is related to service, CVP analysis under service sector. Okay. I don't know whether you have studied it or not. We have a topic of service costing. That how we find the cost, total costs when we are providing the services to the, when we provide the services. Okay. Like you know that a business can be of two types, production related business or service related business, right? So here we are talking about the services like CA, like doctor or advocate. or advocate. Airline industry, they provide the services. Railway, they provide the service. Railway is a service, not a product. Bus, when you use the transportation of bus, it's a service, not a product. So now we are talking about the service sector. All right, we have a question on service sector. All right, so we have the concept related to service sector. We have a question here, so I'll give you time, read it, and then we will solve it. Take your time, read this question, and then we will discuss it. Read this question, then we will discuss. Take your time, read it. Read this question. Always break the question in this way. When you are reading the question now, break the question in this way while you read the question. It will become easy for you to understand. Okay, shall we do this? I hope you all have done the reading of this question. Let's do this question. Before solving this question, just keep it in mind, this question is related to service sector. What is the question? Expert Roadway Service Private Limited is planning to run a fleet of 15 buses in Birpur city on fixed route. So there is a route on which the bus is traveling and it is a fixed route. All right. A route on which the bus is traveling and it's a fixed route. Company has estimated a total of itne passenger kilometer per annum. So 1 year per annum. One year per annum, what is the passenger kilometer? 25185. This is what passenger kilometer. Passenger kilometer per annum. All right, per annum. Now, what is mentioned here that we are running how many buses? We are running 15 buses. All right. Okay, what else we have here? It is estimated buses are 100% load factor. So whatever is the bus sitting capacity, it is always, full. So it's not like that this bus have sitting capacity of 40 and only 20 people are sitting in the bus. It's not like that. So whatever is the bus sitting capacity, that all those bus always have such number of passengers in it. ठीक है. So load factor, 100% load factor means whatever is the sitting capacity of the company always have such number of passenger, right? The company will always have such number of passenger. What else? Buses are purchased at a price of this. Okay, what is the purchase price of the bus? Bus was purchased for 44 lakh, right? And the scrap value was 5,50,000. And for how many years you are using this machine? 5 years. So this will help to find out the depreciation. This will give you what? Depreciation. Just find it, solve it, and you can find the depreciation. All right. Okay. What else is mentioned here? Sitting capacity of the bus is what? 42. So in one bus, there is 42 seats. Okay. Excluding the driver's seat. Remove the driver's seat. For the passenger, we have 42 seats. For passenger, we have 42 seats. What else we have here? Each bus can give a mileage of 5 kilometers per hour, per liter. Okay, per liter, in 1 liter, what is the mileage? In 1 liter, the bus can run for 5 kilometers. All right. What else? Each bus can give a mileage of this. Average cost of fuel is this. So for 1 liter, the cost of the fuel is what? Rupees 66 is the cost of the fuel. What else? The cost of lubricant and sundries per 1,000 kilometer is this. Okay. The company will have 27,500 per month to driver and 2 attendant on each bus. So in one bus, there are not just one driver, but there are 2 attendant also. Maybe conductor, in buses, we have the conductors and all. So they have mentioned you, though there are 42 sitting capacity, but actually 2 seats will be occupied by whom? By attendant. We have 2 attendant in one bus. So attendant. So out of 42 seats, 2 seats will be occupied by the attendant. So how many seats left for the passenger? 40 seats are left for the passengers. Okay. What else we have? Other annual charges per bus is given. Insurance is given, garage charges is given, repair and maintenance is given, route permit charges is given, right? All these charges are given. Now, what is the question? Okay, what is the question? Calculate a suggested fare per passenger kilometer. What fare do you want to charge with the customer? What fare do you want to charge here? All right. Okay. Markup is what? 20% of the cost. Markup means profit. So what do we have to do here? With all the information we have here, first find the cost per passenger, per kilometer. One passenger, 1 kilometer. In one passenger, 1 kilometer, what is the cost? After finding the cost, what you have to do, add the profit. How much profit do you want to earn? 20% of the cost is the profit the company wants to earn. This Railway Service Private Limited wants to earn, right? So cost plus profit will give you the sale value or the revenue which you will collect from the passengers. All right. Okay. So this is the question. Now, when you will solve this question, keep it in mind. What do you have to keep? First, identify all the cost. Identify all the cost related with the passenger kilometer. All right. Okay, let's do this question. Okay, so what will be the depreciation here? I'll write depreciation here then, because I need space to solve the question. Yes. What will be the amount of depreciation? Give me 1 minute. Let me calculate the depreciation. minus divided by 5 years. So 7,70,000 is the depreciation. I'm writing it here. Right? This is the amount of depreciation. Okay. Now let's quickly add all the costs. And solve the questions. All right. So you can see what are the standing cost and what are the running cost of the company. Running means the total variable cost. What are the running costs and what are the standing means the fixed cost of the company. Let's see. So, like depreciation is a standing cost. Okay, let me find the cost again from the question. So here from this line, I got the depreciation. All right. And I know the sitting capacity is for 40 passengers. So there are only 40 passengers, those who are traveling. There are only 40 passengers, those who are traveling, right? Okay. So what do we have? Each bus have mileage of 5 kilometer. So 1 liter, in 1 liter, they are traveling for 5 kilometer. It is given here that in 1 liter, a bus can be run for 5 kilometer. And the cost of 1 liter is what? For 1 liter, the cost is what? Rupees 66. Sorry. Rupees 66. So for this, accordingly, you can find, if you compare these information, 5 kilometer is equals to 66 rupees. So in 1 kilometer, what will be the cost for the company for 1 kilometer? Then we will see for how many, what length the bus is running. Accordingly, we will find the total cost. 66 divided by 5. 13.2. So this cost is here coming as 13.2. Right? This is a cost per kilometer, 13.2, right? Okay. So the cost per kilometer is coming as this cost. This cost here is coming as rupees 13.2, right? Let me write it here. We know fuel cost per liter. Per kilometer. And then we have to multiply it with number of kilometer for which the bus will travel. We will see it later. Okay. Fuel cost. Then what do we have? The cost of lubricant and sundries per 1000 kilometer is what this. Okay. Again, we need kilometer for which the bus will run. Then accordingly, we will find this cost. What is the cost? The cost total lubricant and sundries cost. Total lubricant cost. We will see because we need kilometer. You can see we need kilometer, then only we can find it. Next, what do we have? The company will pay. This is standing charges. Right? What is the standing cost here? the salary per annum. We are doing this calculation for annual, right? For the entire year. So what is given here? Salary to the driver and to attendant. Total salary is given here 27,500. This is the total salary. है ना? So salary of driver and attendant is what? Salary of driver and attendant is what? 27,500. This is for 1 month, right? Multiply it with 12. You will get annual salary of driver and attendant. This will give you annual salary. Okay. Next is what? I'll consider the depreciation also. So depreciation was your 7,70,000. Depreciation 7,70,000. What else do we have here? Okay. Next is other annual charges per bus. Insurance is given. Annual insurance is given. Okay. Garage charges. Annual garage charges is given. Annual repair and maintenance is given. Okay. Let me write them. So insurance is what? 55,000. Insurance, then garage charges. It is 33,000. Then what else you have? Repair and maintenance. What do you have here? 55. Right. This is the annual charges. What else do you have here? The last line. The route permit charges up to 22,000 kilometer is this. Again, I need to find the kilometer traveled by the bus. Now I need to find out what kilometer the company is traveling annually, entire 1 year. What kilometer distance the company is traveling over entire year. You can see other information I can write with kilometer. All right. Now let's see what kilometer the company is traveling over the entire year. Okay, so if you will see here what is given, total passenger kilometer per annum is given. Total passenger kilometer per annum is given. What is it? This is equals to 25,185,000. This is what passenger kilometer per annum. Now what we will do, divide it with the number of passenger. Right, divided with the number of passenger. And the point is that it is actually for 15 buses. Right, this is what total means. It is for all 15 buses. And we want to find out what kilometer per bus. We want to find out the kilometer per bus. So just divide it with the number of passenger, which is 40 here. And the number of bus, 15 buses, so that you can get the kilometer travel by one bus. Just solve this, you will get the kilometer travel by one bus. Right, okay. So what is it? 25,185,000. 25,185,000 divided by 40, right? Divided by 15, you will get what? 41975 kilometer. So you will get 41975 kilometer. This is what the distance traveled by one bus in 1 year per annum. right? This is what distance traveled by one bus in 1 year. What was this information, ma'am? What was the information that was given here? If you will see here, what information they have provided you, this was the total passenger kilometer per annum, है ना? Total passenger kilometer means, total means all 15 buses. This is the passenger kilometer for all 15 buses, and this is the passenger kilometer where you have consider the number of passenger also. For that reason, what I have done, from the total passenger kilometer, I have divided it with the number of passengers, and we have divided it with the number of bus also. Why? Because this was for total matlab the number of buses also included here, and the number of passengers are also included here to calculate the passenger kilometer per annum, right? So I have done nothing. I've just divided this value, right? I've just divided this total value with what? With, I've just divided this total value with what? The number of passengers, which is 40, and the number of buses. That will give me the total kilometer traveled by a bus, right? We will get the total kilometer traveled by a bus. All right. Okay. So here now you can see, if I want to find out the fuel cost, I know the total kilometer. What is it? 41975. This is the total kilometer traveled by a bus in 1 year, right? This is the total distance traveled by a bus in 1 year. Okay. Acha, we have to calculate the lubricant cost also. Let's see the lubricant cost. What information do we have for the lubricant cost? For 1000 kilometer, 3300 will be the lubricant. Lubricant means oiling, greasing of machines. Hai na? So since it is a car or it's a vehicle, or if it is a bus, there is need of some greasing of, the machines or the part of the bus. So lubricating means greasing or oiling of engines or something. So here they are saying once the bus will run for 1000 kilometer, greasing is required, lubricating is required. Again, when the bus will travel for next 1000 kilometer, again the lubricating is required. So the process of lubrication is required after 1000 kilometer. Now you know that the bus is actually running for how much? 4195 kilometer. You can see that actually the bus is running for 414,975 kilometer. The bus is actually running for this distance. And we know after every 1000 kilometer, what lubricating is required. If you divide these two values, you will find that how many times the lubrication is required. So if you will divide it, it will be coming as 4.1975. Ab dekho times nikalna hai. If you want to find out the times, you will see that actually 5 times the lubrication is required. 5 times. It will round off to 5 times. Because 1000 lubrication is required, then 1000 again lubrication. What, sorry, is it coming 4.1 or 41.1? 41.975, I think. 41.975. All right. Okay. So accordingly, we will incur here the cost of lubrications. All right. Is there any doubt? Yes. Do you have any doubt here? So after every 1000 lubrication is required, and what is the lubrication cost here? You can see this is the lubrication cost. So you will multiply it with 3300. Right? You can write the lubrication cost here. So I'm writing it here. What is it? So this is my 41975 divided by 1000 kilometer into 3300. Okay, this will give lubrication cost. This will give the lubrication cost. What else do we have here? What else do we have here? Fuel cost we have considered. Yes, we have considered. What else? Yes, route permit charges we have to find. All right, let's go to route permit charges. The last one. What is the route permit charges? Yes, what is the route permit charges? Let's see. So route permit charges up to 20,000 kilometer is 5,500. So see here. So up to 20,000 kilometer, the route permit charges is what? Rupees 5,500. This is the route permit charges. And you know total kilometer is what? 41975. Okay, now what is mentioned here? 2,200 for every additional 5 kilometer. Now see, beyond this 20,000 kilometer, how much kilometer is left? We have to find it. So 41975 minus 20,000. So this much kilometer will be left. This much kilometer will be left. Divide this with what? 5,000 kilometer, because after every 5,000 kilometer, what permit charges is required? After every 5,000 kilometer, permit charges is required. After every 5,000 kilometer, permit charges is required. Initially, after 20,000 kilometer, one permit charge is required. Initially, what happened? After 20,000 kilometer, permit charge is required. Then after 5,000 kilometer, permit charge is required. Then after 5,000 kilometer, permit charge is required. Then after 5,000 kilometer, permit charge is required. So in this way, permit charges are required. Now here we want to find out how many permit charges is required, how many times the permit charges is required, right? Okay, let me see how many times it is coming. 41975 minus 20,000. This is coming as 21975 divided with 5,000. This is giving me 4.395, right? 4.395. Right, okay. And one permit charges is required here. So this will give me the number of times the permit charges are required. All right, okay. Is there any doubt? Up to here, any doubt? Please write in comment. If there is any doubt, if you didn't understand anything, if you want me to repeat something, please write in comment. Do you want me to repeat something? Yes. Anything not clear here? Any doubt? Any clarification you need here? Yes. Do you need any clarification? Yes. Okay. Okay. So let's see these costs. Let me add these costs now. Okay. Chal, let's do this now. So if you will see here, we have calculated everything now. We have calculated the running cost. Running cost is clear. We have calculated the lubricant cost. We have considered the salary, depreciation, insurance charges, garage charges, repair charges, everything. And the last one, the route permit charges. Okay, let me quickly write the route permit charges here. So initially the route permit charges was 5,500. Initially it was 5,500. Initially, it was 5,500. Plus, then what happened? this, right? This time you need route permit charges. So obviously you will round off it to 5 times. 5 times route permit charges is required. All right. What is the cost of route permit charges? 2200. All right, just solve it. $2,200 into 5. This will give you 11,000 plus 5,500. This will give you 16,500. Route permit charges is what? 16,500. This is the route permit charges here, right? Okay. And what is it coming here? Let me just calculate the values quickly. So if I multiply 13.2 into 41975, this will be giving me 554,070, right? This is what? This is what total fuel cost, right? I have just calculated this value, total fuel cost. Now lubricant cost. Lubricant cost. So what will be the lubricant cost? Okay, give me 1 minute. Shit. Okay, just give me 1 minute. Okay, so if you will see here, what do we have? We have calculated these values. Give me 1 minute. So we have just calculated this value. Let's calculate this value also, right? Okay, so what is it coming? You can see 41.975, 3,300 into 41.975. So this is coming as 138. What was the value? 138,517. 138,17.5. Whatever. ठीक है. 138. Okay, so this is the value which we have calculated. I hope it is clear to you all. Okay. So we have just calculated these values, right? I have just done the calculation, right? I have just multiplied this value. I got this value here, and then I have just multiplied these value. I got this value here, right? And then other values, and just add them. You will get the total cost, right? Let's quickly add them. Let's quickly add them. Okay, let's quickly add them. All these values. Okay. Okay. What is the value of this if we multiply these two values? Give me 1 minute. So this is 27500 into 12. This is coming as 3,30,000. 3,30,000. 3,30,000. 3,30,000. Okay. Now let's add them quickly. 554070 plus 138,519 plus 330 plus 7 lakhs plus 55,000 plus 33,000, 55,000, 16,500. Okay, this is the value. This is what the total cost we have in the company. All right, this is the total cost we are having in the company. But now what do we have to do? It is given in the question that we want to maintain a profit of 20%. We have to maintain a profit of 20%. So now what we have to do, 20% profit we should add. Where is it written? Let me show you quickly. See, it is given here that we need a markup of 20%. Markup matlab we have to maintain a profit on cost 20%. So what do we have to do? We have to add a profit here. How much profit? 20% of this value. This is the total cost of the company. So 20% of this total cost, 1,952,089 rupees, right? 20% of this value will be the profit for the company, right? Into 0.2. This value is coming as 390,418. Profit. Add it. You will get what? The total sale value. So what is it coming? Plus 1,952,089. All right. So 23,42,506. Right. This will be the total revenue of the company in this scenario. This will be what? The total revenue of the company under this scenario. All right. Okay. Let me show you quickly. So you will see here, this is the revenue, right? You can see we have correctly calculated this. And that's it. We have calculated it correctly. Now, what is the question? Let's read the other part of the question. This is the other part of the question. What is given? The transport sector of Birpur is highly regulated. The government has fixed the fare of rupees 1.35 for next 2 years. So since it is highly regulated, government has done what? They have fixed the revenue. Okay, they have fixed the revenue. So here what is happening? Here we are fixing the revenue. We are deciding here, the company is deciding how much revenue is required to be collected. So here what is happening? The company have decided the total cost and the company have added the profit which they want to earn here, right? And the company have calculated the total sale here. But the point is here, the revenue is decided by the company. But now what is happening? It is mentioned in the next part of the question that this area is highly regulated by the government and the tariff rate will be decided by the government, right? Okay. So in the next part of the question, it is written that the tariff rate will be, the fare will be what? Fare will be rupees 1.35. It will be decided by the government for next 2 years. Comment on the 2 years profitability taking into consideration of inflation of 8%. Now see, this question we have to do it again in next session. Let me give you an idea. We will continue this question in next session. It will take time to do it. So what is actually happening now? You have already calculated these values, right? Just give me 1 minute. Okay, so if you will see in this question, we already have all the costs, right? We have these costs here. Now, what is happening here? They are saying this is for the current year, right? This scenario is for the current year. Now, what will happen in next year? There is inflation of 8%. So next year, what will happen? These things will increase, right? If there will be inflation, the depreciation will remain same. But apart from depreciation, salary will increase by 8%. Insurance will increase by 8%. है ना? Garage charges will increase by 8%. Repair insurance will increase by 8%. What remain fixed? First, depreciation will remain fixed. And the second, this route permit charges will remain fixed. Otherwise, everything will increase. Fuel costs will increase by 8%. Lubricant costs will increase by 8% for the next 2 years. Let me show you directly because just 2 minutes left. Okay, so what will happen? This is the cost sheet of 1 year. Now, what will happen in next year? You have to prepare the cost sheet, and for the next year, you have to prepare the cost sheet. What will happen? You will increase the garage charges by 8% here. You will increase the insurance charges by 8% here. Depreciation will remain same. Repair charges increase it by 8%. Lubricant costs increase by 8%. Fuel costs increase by 8%. Salary of the driver increase by 8%. Route permit charges same. It will remain same. Then whatever the figure you will get it here for, because next 2 years the inflation will be applicable. Okay? So for the next year you will calculate it, and on these value again add 8% to find the value of the next year. So again you will do the same here also. I'll do it in next session, so don't worry, I'll keep this file safe, right? So you can see the new value. First here the 8% increase I have calculated, then from all these value they have added 8%. They have added the 8%. So what will happen? The new cost will come here. The total new cost will come here. And they have decided the revenue. They know the revenue because the tariff rate is, fixed here. So accordingly, what will happen? Accordingly here, you have to find out what profit they are earning. Okay. What will be the percentage of profit they are earning here? All right, so this is something we will do it in next session. Okay, just keep it in mind because it is given in the question. You can see the second part. Second part, it is clearly given to you. It is clearly given here. What fair rate will be fixed for next 2 years? It will be fixed. Matlab total revenue is fixed for both the year. But the cost will increase due to inflation 8% every year. So the cost will increase. And then you have to find out the profitability in each case. So this is what they are doing here. You can see here. You can see here both the cases. The revenue is fixed in both the cases. According to tariff rate, we will find the revenue. It will remain fixed. But the cost will increase. And accordingly, the profit will change. Okay. We will do this in next session. All right. With this, let me wind up the session. If you have any doubt, please ask your doubt. If you have any question or a doubt in your mind, please ask your question. Okay, so there is some question. There is one question from Janvi. The fuel cost will be 5.9. According to the kilometer travel by the bus, you will find the fuel cost, Janvi. So if, for example, you are decreasing the kilometer, fuel cost will reduce. If you will increase the kilometer, fuel cost will increase accordingly, right? Okay, lubricant said 3,300 is for 1,000. So we will consider it 42. Okay, so again, because see, the point is that Janvi, lubricant is something you can put according to kilometers. So you don't need to round off the figure. Just like permit, for the permit, we need to round off the figure. Because after every distance, you need a permit. After every distance, you need a permit. But for lubricant, it can be break. Like if it is half of the distance, accordingly, you can put half of the lubricant. So lubricant can be divided according to kilometer, but this route permit charges cannot be divided according to kilometers, right? You have traveled half of the distance, so half of the route permit charges will be applicable. This is not possible, right? Whether you travel even one extra mile, one extra kilometer, you have to take extra, route permit charges. So for route permit charges, we have round off the figure. So 4.1 to something to 5 we have taken. We have round off the figure. But in case of lubricant, in case of fuel, you can exactly find the value, how much lubricant is required, how much fuel is required. So no round off will be taken place here in case of, in their cases, right? Okay, any other doubt? Is there any other doubt? Yes, Janvi, are you satisfied with the answer? Yes, dear? Write in comment quickly. Is it okay? We will discuss this question in next session also, all right? Okay. So with this, let me wind up the session. So have a nice day, all of you. Take care. Bye.